Okay, and welcome back, students who are taking financial accounting. And in this very last video, we're only working on one problem here, and it's the problem that was assigned in your digital study guide for the Chapter 7 appendix, the problems for Group B. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. So, last problem, and I highly recommend that you watch the theory videos for petty cash and that you actually go back and do the short exercise 7A-2 and the exercise 7A-6B. Okay, that was 7A-2 was a simplistic look at doing the petty cash. 7A-6B added a wrinkle in it in that there was a shortage, and I also explained what to do with an overage. But watch the theory video so that you know what you're looking at when you're thinking through the entire overall process of doing petty cash. Now, I didn't look at this problem, so I don't know what new wrinkles might be in this one, but we'll see. All right. So on August 1st, City Delivery creates a petty cash fund with a balance of $450. During August, Ava Unger, the fund custodian, signs the following petty cash tickets. Okay, and remember, I had in the short exercise 7A-2, I explained this idea about petty cash tickets being the same as a receipt, but go back and watch that video. All right, so on August 31st, prior to replenishment, the fund contains these tickets plus cash of $209. The accounts affected by petty cash payments are office supplies expense, travel expense, delivery expense, and entertainment expense. So from this information, I have what 9 and 2 is 11, and 5 is 16. That's 10. That's 10, 13, 20, $206 in petty cash tickets, and I have cash of $209. Right, so again, here's the petty cash box, and it's supposed to have $450 in it. It has $209 in cash plus $206 in receipts. That's $415. Okay. Obviously, it's supposed to have $450. Well, it's short $35, and this was covered in exercise 7A-6. Okay, so if you work through that one or you watch that video, you're seeing the exact same thing happen here. The only difference being is that in that video, it told you immediately what the expense accounts were. But here, you're being told what the item is, okay? And you actually have to say, okay, my office supplies, I'm going to use the office supplies expense account for it. Cab fare for executive, okay, well, the account that they're using is the travel expense. Delivery of package across town, all right, they're using delivery expense. And dinner money for president and potential customer, entertainment expense. So what that means is when you write the check, all right, to replenish your cash, you're going to write the check for $206. I'm sorry, $241, right? Because you have $450 in cash you're supposed to have 450 and you have 209 in the box, right? So that means you need to write a check for $241, right? So you're going to write that check for $241 and you're going to attach those receipts to that check. And when you attach it to that check, it's just like writing a check. Let's say you write a check for rent or for $1,000, right? Well, you credit your cash and you debit what? Rent expense. Well, in this case here, you're crediting cash, but you're also debiting office supplies expense, travel expense, delivery expense, and entertainment expense. You're taking each and every receipt and you're deciding what expense it is, and those are the expenses that you're going to use for the journal entry, right? So number one here says record the journal entry to create the petty cash fund, right? So on August 31st, oh wait, let's see here, on August 1st, right here, we're creating the petty cash fund with a balance of 450. So we credit our cash for 450 and debit petty cash for 450. Number two, record the journal entry to replenish the petty cash fund on August 31st. Do you have any concerns over the petty cash, over the cash over and short account? Right, so I'm going to have to debit all of these expense accounts. So I'm going to debit office supplies for 92, debit travel expense for 29. Now, you'll write out travel expense and office supplies expense. I'm just keeping it short here. Delivery for 15, and entertainment for 70. And since I'm short, I'm going to debit cash over short for 35. And of course, I'm writing out the check. I'm crediting my cash for the 241. So that's the journal entry that I'm going to make when I write this check. Right? Now it says, do you have any concerns over the cash over and short? All right. If you're an accountant, you're going to take a subject called auditing. If you're going to become an accounting major, and you're going to take a subject called auditing, which lays out statistical parameters that determines whether something is quote unquote significant or not. Okay. On $450, if you were short $5, yeah, I mean, no big deal. I mean, you don't want to constantly be short $5 all of the time. When I actually was a manager of a retail outlet, I had an employee who every day was short, okay, every single day. And they were only for small amounts, okay, $1 here, $2 there, $3 there, but every single day. Hardly ever was this employee over. Now, $1 is insignificant, but every single day, that stuff adds up and there's something wrong with that, so I had to let an employee go. So if you have a shortage and it falls within the statistical realm of being insignificant, no big deal. But if you have a shortage of $35, that's almost 10% of $450. That's significant. Okay, that's something that has to be looked at in order to determine what happened and to see whether you have your proper internal controls in place so that you don't have these amounts. All right, you don't have this kind of shortage going on. All right, so yeah, you have to be concerned about this $35. When you take the auditing class, you'll understand the underlying reasons as far as statistical analysis and so on and so forth to determine whether something is significant or not. But just even on the surface, even if you're a business manager, you can tell $35 is too much, okay? All right, so then number 3 says, make an entry on September 1st to decrease the fund balance to 400. Include an explanation and briefly describe what the custodian does when the balance is decreased. All right? So the custodian being the person who controls the petty cash fund. So on 9/1, right, let me just quickly back up. All right. Remember, the entry that we make to establish the petty cash fund is this entry here. Okay, debit to petty cash and credit to cash. Well, if we're going to decrease the fund, right? So on 9/1, we're going to decrease it to 400. If it's at 450 and we want it to be 400, we're going to decrease it by $50. Well, to decrease it by $50, all you're doing is just making a reversing entry of that. So I will debit my cash, so we're putting our money back into the bank account for $50, and we're crediting our petty cash by taking it out of the petty cash. And of course, you'd write a description to say something along the lines, to decrease the petty cash fund from $450 down to $400. What it says here, and briefly describe what the custodian does when the balance is decreased. Well, basically, you're taking the $50 out of the box, right? You're not going to have 450 in the box anymore. You're going to have 400, and you're going to take that $50 and you're going to deposit it into the checking account or the cash account. Okay, and you would make a journal entry. That's the journal entry you're going to make that supports that deposit. Okay, so that's it for this here problem, and actually for this here appendix, and for chapter 7 in and of itself. So definitely go back and watch the theory videos if you have to, and if you still don't understand something, feel free to contact an instructor.